What's going on, everybody, and welcome to Let's Talk Money. I'm Nikolay Timoshchuk Jr., and today I am excited to talk to you about how you can improve your credit score. This is something that goes over the heads of many people. This is stuff that is not taught in high schools. This is stuff that you don't learn until it's a little bit too late in most cases. Now, if you're lucky and your parents teach you about this, or somebody like a grandparent, or you just get into YouTube videos, or whatever you came across and you got lucky and you learned about credit scores before it was too late, you are lucky. Let's just say that. However, there's a lot of people out there, maybe you watching this video, that don't understand what a credit score is, but I'm going to explain that to you in very simple terms with 5 steps on how you can improve your credit score at the same time. So I hope this video really helps you, and I hope that it puts you ahead in life and so that you can finally start doing things that actually make sense, whether you're talking about financial literacy, maybe starting a business, or whatever that may be. Understanding your credit history, your credit score will really benefit you in life when you're able to understand all these different things when you're trying to move forward in life. Now, the first thing I want to do is explain to you what a credit score even is, right? What is credit in the first place? Well, let's talk about credit, just credit itself. Credit is when you can actually obtain a good or service before you actually make the payment, right? So how many times have you gone to a place and someone's been like, hey, go ahead and grab this and you can just pay me later? All right, that's happened before. Or somebody cuts your grass at your house and they're like, hey, just pay me next week. You don't have it right now. That's credit. That's when someone's giving you something and you haven't paid them yet. Well, what is credit score? It's when lenders, people that give you loans or give you certain type of accounts with money that doesn't belong to you, and you can actually spend it and they believe that you will pay them back. Well, what does a credit score really mean? It is a number that literally signifies and tells companies that are willing to lend you money a score that says, hey, this person is trustworthy or this person is extremely untrustworthy, non-trustworthy, not sure what the word is there, but you cannot trust that person if their score is below a, let's say, 600 and below, or if they're above a 650, then it's a mediocre, credit score, and you can kind of maybe lend them some money. They may pay you back, they may not, but if you're above a 700, hey, this is a really solid person. If you're above a 750, wow, this person is amazing. And if you're sitting at an 800 credit score, guess what? Take my money. You can have it all. You will pay me back whenever you want to. That's how it works. There's different levels. And just to understand what credit scores are can be confusing if you've never learned about them. So being able to understand, hey, this is what a credit score is, and this is how I can prove my credit score over the years, or maybe right now because you actually, want to buy something in the future where you have to take a loan out or get a credit card or whatever that may be. This is something that you need to understand. Sorry for the interruption, but I'm going to have to ask you real quick to go ahead and hit that subscribe button. Make sure you hit that bell, turn on your post notifications, make sure you hit that like button, hit that share button, and drop a comment below so I know exactly what y'all want to talk about and we can reach awesome people all around the world and get them excited about finance and business. Sorry for this lame commercial. Let's get back to what we want to learn about. Now, the second thing that I think you should start doing when trying to improve your credit score is start adding up all your debt and see what your monthly payments look like so you can actually figure out which payments you make affect your credit score, right? Let's say you pay a car insurance bill. Let's say you pay a house mortgage. Let's say you pay for your apartment. Let's say you pay the light bill. Let's say you pay for groceries. Let's say all these things, all your expenses are there, right? Write them down on a sheet of paper and then actually figure out which ones get reported to credit bureaus. Let's say if you pay a mortgage, guess what? That gets reported. Sometimes apartment complexes do report to credit bureaus, but sometimes they also do not, depending on the size of the apartment building you live in. If you are 1 month late, guess what? They hit you on your credit report and right away you'll see your credit score go down. A mortgage, banks will definitely do that. If you miss payments and you have a loan with a bank, they will definitely do that. If you have a credit card payment and you are late, they will definitely report to the credit bureau and your score will go down. So just make sure that you see where these payments are going and see which ones are actually getting paid on time and not getting paid on time. So your light bill, that does not go to the credit bureau. You're just gonna get your lights shut off. Your grocery bill, that's just money, that you're paying in cash. Or if you're using credit cards, then you need to make sure you're paying that off absolutely for sure when it says it is required, or they will report to the credit bureau. All these loans that you get from banks, any institution that's lending you money, with a bunch of paperwork, you're typically gonna get reported to the credit bureau. So just make sure, go through and see which of these payments actually get reported to the credit bureau and start focusing more on these. If you're short on money, focus on those payments the most because you'll be able to raise your credit score. If you're not short on money, just make sure you're actually taking the time to prioritize your payments, and so that you can continue to build that credit score up the way that it should be. Now, the third thing that I will encourage you to do is create a payment schedule. What does that even mean? Well, for example purposes, let's say you have a credit card and you spend about $500 a month on it. Well, at the end of the month, you want to pay off that complete $500 so that you're not paying interest on that money that doesn't necessarily belong to you, right? So there is no quotations. That money does not belong to you. When it's time to pay that money, you're like, crap, I don't have enough because I spent it on small little things here and there. Let's say a smoothie, a coffee. You got extra things that you might have not got if you would have actually paid half of that in the middle of the month, and then the other half when you got your next payment. Let's say you get paid every 2 weeks. You'll actually see your credit score start rising exponentially, because I've actually done that in the past and it worked for me, and it keeps you motivated. It keeps you disciplined. You start seeing that limit go down lower and lower and lower, and your credit score is going higher, higher and higher. So if you need to do that, if you need a little help to be more disciplined because you spend money throughout the month and you can't save up that full amount, what you need to do is start paying it off 2 times a month. Maybe it's the 15th of the month and the 30th of the month. And that just gives you time to be disciplined. That gives you time to schedule yourself. That says, hey, I just need to save up half of that for 2 weeks and then the other half for another 2 weeks, and I can pay off my entire credit card bill. And the credit card company reports that to the credit bureau, and your credit score starts soaring, and you'll be in the 700s in no time if you can do that for a year or two. And then you start building that up, you'll be in the mid to upper 700s of credit scores, and you'll be able to get a loan from practically anywhere as long as your income to debt ratio makes sense and they can actually give that to you. But you will be to the lenders a good borrower because it tells them that, hey, this person is actually very responsible. Now, the fourth thing that I will tell you is to make sure that you're not opening new credit accounts over and over and over again. Once you open that first or second credit card, once you have that first loan, maybe you're, using an apartment or whatever it is, and then you start buying a car, and then you're like, well, I want another credit card. Every time you apply for a credit card or a new loan or whatever that is, it hits your credit score and it decreases actually. So if you're just getting credit cards every single month because, hey, they're giving a promotion, they're giving $50 when you spend $250, or you get $500 bonus referral points or whatever, it's very easy to get enticed with all these different promotions. But every time you open a new credit account, your score actually goes down because the credit bureau gets a hit that says, hey, this person needs to borrow money. That means they don't have it. So don't open new credit accounts constantly. Open up your first 1 to 2 to 3 credit cards, whatever it is, have your mortgage, have those things that actually make sense for you, and then just build off of those and let the years do what they do. Now take about 6 months to 1 year to build that one credit card. And then after that, you can get another one and start building that way. So credit bureaus go, hey, he or she is good. They don't actually need the money, but we know that if they do borrow the money in some certain situation, they will be able to pay it back. That's what that is. But every time you open a new credit account, your score will go down just a little bit. And if you keep doing that over and over and over and over again, well, you just guess what? It's going to multiply into a really bad credit score, especially if you just get into a big hole and you're not able to pay that debt off. So be careful. Build your credit score from 1 to 2 to 3 credit cards as long as you possibly can. And the longer you have a credit account open, the better your credit score will go. So hold that credit card. Don't close it out. If you get it 7 years ago, don't close it out because you don't use it anymore. Maybe use it for $20 a month or something. That will make your credit score go up as much as you possibly can imagine, because it tells them that, hey, this person is very reliable. Now, the fifth thing that I would encourage you to do is make this extremely important. This moment right now, when you're watching this video, when you're making the choice to actually care about your credit score, when you're like, hey, I want to improve my credit score, or I want to start right now, it is extremely, extremely important, because guess what? In 2 or 3 years, you are going to have leveraging power. You're going to have borrowing power. You're going to be able to go apply for a home mortgage. You're going to go, be able to apply for a car loan. You're going to be able to get credit cards. But if right now you do these things the wrong way, in 2 or 3 years, you're really going to hate your financial decisions, and then you're not going to be able to get a house. You're not going to be able to get a car. Or if you do, it's going to be at the most outrageous rates, and you're just going to be paying interest for the rest of your life, and you do not want that. I don't want that for you, and I promise you, you do not want that for yourself. So make sure right now you make that choice. Make it important, because also, not just 2 or 3 years down the road, in 10 years down the road, when you're sitting there, maybe you have a family or whatever it is, and you're like, wow, we really need this, but I can't just pay $500,000 in cash for a house or $250,000 in cash for a house. I need a home mortgage, and you can't do it because your credit score is shot. You're going to be really upset with yourself, and then you're going to be hoping that your spouse has a great credit score and that they'll allow your spouse to do it. It doesn't always work that way. What if 2 people come together that have terrible credit scores? Then you're just going to be renting your whole life and just doing things like that, and you'll just be throwing money away instead of owning things, which I am a true proponent of. I love when ownership is talked about, because why? I always have this house to come home to. I always have it for myself, and no one can take it away from me unless it's the bank and I don't pay my mortgage on time. And once it's paid off, it's mine. So make your credit important to you right now. And if you do, you're going to thank yourself. And then I hope that you come back on this video in 2 or 3 years and you just drop a comment, say, hey, thanks so much, Nikolay. You're awesome. Love you. Okay. And I'll just say, I love you too. But regardless, make it important, because it is, and you will thank yourself 2 or 3 or 10, 20 years down the road when you're able to get what you actually want in that moment. Now, without further ado, I hope you enjoyed this video, and I hope it helps you increase your credit score exactly how you want it to. It does take hard work, it takes determination, and it takes a lot of discipline. This is not easy stuff to do. You have to stay in a routine, you have to be structured, and you have to make sure that you're actually taking the necessary steps to help yourself, because no one else can do it for you. But I'm gonna go ahead and have to ask you to go ahead and hit that subscribe button. Make sure you hit that bell, turn on your post notifications, hit that like button, hit that share button, and drop a comment below so I know exactly what you guys and girls want to talk about as I put out these videos. Thank you so much for watching. I love you so much from the bottom of my heart, and I'll see you on the next one. Peace out.